Problem 8-50 on page M-250 uses the format from page M-223. While the format on your screen seems complicated, it's really not all that bad. Basically, what this format does is to determine the percentage of savings earned when using purchased equipment that normally would have been rented. It's another way to determine a course of action which might be better for the business. On the screen to the right of the line descriptions are two columns. The first one contains what I call primary calculations. The second is the final calculations. As the numbers are entered, I will explain how this analysis works. In the book, there are only 4 numbers that will need to be entered on the screen. The first is the cost of the equipment of $196,600. The second is the annual rental of similar equipment of $45,076. The third is the estimated useful life of the new equipment, which is 8 years. And the final number is the estimated residual value of the purchased equipment, which is estimated to be $9,000. On your screen, the $196,600 for cost of equipment goes into the cell under Primary Calculations and to the right of Cost of Equipment. You'll notice that a formula also puts that number a few lines down in the final calculation column. Under the Cost of Equipment in the Primary Calculation column goes the residual value of $9,000. This entry enables the formula in the next cell down to calculate a net amount to depreciate of $187,600. Now the book indicates that the equipment has an 8-year life, so the number 8 goes into the cell between the words "for" and "years" on the line labeled Annual Depreciation. This now enables the cell just to the right of Annual Depreciation to calculate the annual depreciation, which comes to $23,450. Moving down to the second half of the schedule, the $23,450 is in the cell to the right of depreciation, and the annual rental saved needs to be entered in the cell below that. From the book, that number is $45,076. The cell to the right and down one subtracts the depreciation of $23,450 from the annual rental saved of $45,076 and indicates a net annual rental savings of $21,626. This is divided into the cost of the equipment 4 lines above to calculate an 11% accounting rate of return on the savings being realized by this purchase.